And we're live. We're on television.
Good afternoon, I guess, right?
Yes.
We're a little tardy. It's a little
all
after
right.
12.
It's all right. It's all right. Brian Sinkoff here with you. I am associate real estate broker, Muccio Real Estate Group. We got my man Drew Aiello. Drew, official title? Could you give it?
Branch manager, Fairway Independent Mortgage.
We are right here in Drew's brand new Clifton Park office.
Licensed 1 week.
Yes.
Yesterday.
Awesome office here.
Office.
So we, not Drew. Drew, for those that just are new to the page here or just checking in, welcome. Thanks for joining us. A couple of quick things. I am an associate real estate broker with Muccio Real Estate. I've been in the real estate business for about 11 years now, sold over 300 homes during that time. Buyers, sellers. I'm also a certified buyer's representative. And Drew Aiello is, Drew, you give us some of your background, if you will. You've been doing this for 3 decades.
Scary to say. I just thought I'd try it out in 1995, and here we are, 2022. So January would be 28 years that I've been doing this. Been in financial services, though, my whole life right out of college. And thought I'd try it out, and here we are. And happy to be here. New to Fairway as of June of this year, became a branch manager in an office now in Clifton Park, and looking forward to the future.
Just give me a thumbs up if you guys can hear us. We do have the microphone plugged in. Farah, anyone else watching, hello. Thanks for watching. Just give me a thumbs up. Make sure you can hear us okay, because we do have the microphone here. I'm high tech.
He's got the mic, so hopefully you can hear us both.
All right, we got no thumbs up. Do we have any Bueller? Do we have anybody? Can we actually hear? Can you actually hear us? I'm assuming you can.
Anyone? Bueller.
All right, so I got some notes, copious notes here. Here we go. Drew, I want to give sort of a breakdown of the market, and we're here today to talk about the real estate market, how it impacts you, how it's impacting the economy, how it's impacting the world. You hear a lot of gloom and doom out there, but we're here to tell you, don't believe, as Public Enemy said, don't
believe that.
Don't believe the hype. Hey, Farah, how are you? So don't believe the hype. You hear that the Capital Region has been pretty insulated from any sort of major real estate ebbs and flows. We kind of been in the middle, but we wanted to talk to you today about not only how the interest rates are impacting the market, but what's the future like. We're doing some basic prediction, sort of not necessarily predicting, just we're not going to say, hey, it's going to be awesome in 6 months, but we think it's going to be very good. So Drew, talk about today's interest rates, and I know you can't give a direct number, but just roughly what's the range of where they are?
Well, just to give you an idea, what's happened over the last, I would say, less than 30 days, we saw rates in the 7s. Now we're seeing rates in the low 6s, even upper 5s.
Mm-hmm.
So the bond markets have changed dramatically in the last 30 days. And that is because all due to inflation. We had inflation numbers that came out November 10th, very positive. The bond markets rallied substantially. We had inflation numbers come out this morning even, and the bond markets are reacting positively. And tomorrow is the big jobs report, unemployment report, and that also could be a market mover depending on how that report comes out in terms of unemployment and jobless claims and job growth.
And we did a Facebook, a sort of a real talk, if you will, about a month and a half ago. Everyone hears inflation, but real estate market in inflation actually thrives, right?
Well, in a recession.
Not a recession.
Right.
You know what I meant.
Exactly.
A recession, not inflation. We hear the term recession, and everyone panics, but a real estate market thrives in a recession.
Right. I think the worst is over in terms of inflation. I feel like finally inflation has peaked. Now inflation is starting to come down. One inflation report at a time. It's not going to go like this. One inflation report at a time. It's all positive. So the worst is over. Rates are going to be in a steady decline right now. That's why I'm so bullish on the housing market, because I think because of the media and because of what's out there in the public, people are afraid to actually go look at houses. Where I feel, and you can second it if you want, now is the time to buy because the market is a little bit soft. Sellers are willing to negotiate a little bit. because there's less buyer traffic. But we should be doing the opposite. We should be out there right now because, as you probably can certify, there used to be 15, 20 offers on a house. Now there might be 5 offers on a house.
If that.
Right. So there's less competition, and that's, of course, when you want to be buyers of homes. Whereas I think over the next 6 months, when rates continue to go down, all the people that are on the fence come back into the market. Then you have increased competition, harder to get offers accepted. So I think right now, if there was a neon sign out there, Brian, I would say it would be flashing buy, I think.
To quote in sync. I'm always the quote guy. Listen.
You should be a DJ,
yeah,
by the way.
I was in college. Listen, I've always said, and you guys know me out there, and you probably know Drew as well, I'm never here to tell you do something you're not comfortable with. And we are very, very, my clients can attest to that. I've had clients looking for 2 years when they're ready. Sometimes clients just call me out of the blue and say, let's go. So I'm not going to say, hey, now's the time to buy. You better buy now. You have to ultimately, you as the client, the buyer, the customer, has to ultimately be comfortable with the decisions you make. What we are here to do is we're not crystal balling this. We're just giving you the facts and then letting you make the decision based on the information we're giving you. And we want you to be informed. We want you to make decisions. But I can tell you, this is real world, like we're in the trenches. This is not an article you're reading. This is not some talking head that, with a suit on, sitting in an office, hadn't sold a real estate, hadn't sold a house since the Clinton II administration. This is in the trenches stuff, okay? I'm telling you that in the last 3 months as buyers, from 2020 to summer of 2022, I didn't see any, and you can attest, you do a lot of loans.
I know where you're going.
There was no FHA loans.
Right.
There was no VA loans. There was no seller concessions.
Right.
Just the market was too hot. You had 5 to 10 offers on every house, and going down the pecking order, you're the seller, you don't want to do concessions. You don't want to, VA loan is a great loan, a USDA loan is a great loan, FHA is a great loan, but there are some stipulations that could hold up a sale. You didn't see any of that for 2 years.
Right.
Guess what? We've seen that in the last few months because the market has got a little bit softer. So what it's doing is it's bringing more buyers to the table. I said when this market was nutty, okay, I said it was eBay on crack. I told you, I told everyone in the industry, I told people out of the industry, the rates were dangerously too low. Too many people were buying houses that ultimately should not have been, because money was so cheap to borrow. And that's kind of why we got to where we are now.
I agree. What we had the last 2 years is not sustainable. So now we're trying to get more, we're trying to get back to a more normalized market. And I think, I'll second your point. If now's not the time to buy for you based on your own personal circumstances, don't buy. But if you're looking to buy, if you're sick and tired of renting or trying to upgrade, and you're afraid because of interest rates, unfortunately, now is the time to buy if you're in that position to buy, because there is less competition. And I just don't want people to be afraid to buy based on interest rates, because you can get an adjustable rate mortgage. You could get a 2-1 buy down.
What's an ARM right now?
An ARM is probably in the high 4s, low 5s.
And again, you're going to be in the house. The average American lives in a home 3 to 7 years. You're probably going to be in a house long enough. We're again not predicting the future, but I think it's safe to say within the next 2 years, the rates are not going to be where they are today, and you refinance.
That's the thing. This is a little cliche, a little corny, whatever you want to call it, but it's the truth. You date the rate, but you buy the house. You marry the house. You marry the house. You date the rate.
You botched that joke,
right?
By the way.
The house is the important thing. The rate is temporary.
Correct.
A year from now, 24 months from now, you're not even going to have the same interest rate, because rates are going to continue to drop down. And in the next 12 to 24 months, you refinance and drop your rate down. But the house is the most important thing, because I could bet dollars to donuts over the next 6 to 12 months, the house you're trying to buy today will be worth more tomorrow. So that's the important thing.
And let me just say this as well. Again, the important thing about all this, because in our industry, in the real estate industry, now's the time to buy, now's the time to sell. In Sinkoff, you're doing a tap dance, you're doing a song and dance. I'm giving you the information. You make the decision. We're giving you what we know, being in the trenches. You make the decision. You have to be comfortable. But what I'm telling you are the facts about what we've seen. 42 showings, 18 offers, $50,000 over the asking price in a house I listed in March, a house I recently listed, just above asking price. This already closed, so I'm not divulging anything that's not public record. Just above the asking price, 1 or 2 offers.
Right.
Look at the difference, people.
Right. You have a shot now.
You have a shot. And Drew talked about appreciation. The normal appreciation in a market on a house is what, 2 to 3%?
2 to 3%. They're projecting, when I say they, like the Zillows, CoreLogic, all these services, they're estimating about 4% next year.
Okay, and what we were seeing 2020 to 2022 was 20% a year,
right,
which is just flat out not sustainable.
And this year we'll probably get 10 when it's all said and done.
Which is still amazing.
Yeah.
But that's not sustainable. That means if you bought a house for $400,000, you're talking about it being worth $40,000 more in a year.
Right.
That's crazy. That's not healthy, guys, gals, whoever else is watching. So again, we give you the information, let you digest it, breathe in, and you breathe out, and you take this information for what it is.
Yesterday was a great day, by the way.
Talk about that.
So I just want to bring you up to date if you haven't seen it yet in the news, but the Fed chair, Powell, spoke yesterday, and he is starting to see some improvements with inflation. So as early as the next meeting, December 14th, he signaled that the increases in interest rates could be much less. So originally they were thinking 3/4 of a point increase in December. Now it's almost a lock-in based on what he said yesterday of 50 basis points or 0.5% increase.
Which is for like credit cards and that type of
Credit
stuff, not
cards,
interest
home equity
rates.
line, mainly the Fed funds rate, which
Correct.
is
Correct.
way out of the ballpark to talk about. But basically, what he's trying to do is, bump up interest rates a little bit to slow economic activity down to obviously pull down inflation. So since the Fed increased last month 0.75%, mortgage rates have come down almost a full point, almost a full percentage. And that's the point I want to try to make. When the Fed bumps interest rates, if they're doing it properly and if they're doing it to curb inflation, mortgage rates will actually come down. And now we're starting to see that. So I'm very optimistic on mortgage rates.
All right, and we're going to wrap this up here in just a minute. We are going to answer a couple of questions. We had some people text me. Drew got some texts and some emails actually even before we started. So we'll answer those questions. But what I want to say is this. Actually, Drew, answer a question, and then we'll come back to my thought.
I got this question earlier today, actually, is about down payment.
Good, yep.
Because a lot of what you see in the media and online is not correct, in the sense a lot of people still think you need 20% for a down payment.
All the time.
You could actually buy a house with 0. So if you're a VA loan, 0 down. If you're a USDA loan, 0 down. If you're a conventional loan, first-time home buyer, you could actually buy a house with 3% down. And FHA will let you buy a house with 3.5% down. So I wanted to dispel that rumor that you need 20% down, because don't let that be a barrier to entry when you have rents last year, for example, went up 18%.
Crazy.
So.
Crazy. All right, so this is what I was going to say. I get asked this, I think probably 3 times a day, and I'm not exaggerating, whether it's a Facebook message, a text message, when I'm making my phone calls, people just reaching out to me. Sinkoff, how's the market? And they actually say, Sinkoff, how's the market? Like they don't.
Do people know your first name?
I actually, a side story. Can we side story? Let's try. My cousin Steven, last name Sinkoff, my first cousin on my dad's side. I called him last night. And I said, "What's up, Sinkoff?" And he's like, "Hey, Sinkoff." I'm like, "That's so weird. Like I'm referring to someone else as Sinkoff." And I said, "Oh, people only refer to me as my last name. It's very odd." Anyway, I digress. Let me get back on the road.
Sorry, some questions. I apologize.
Yeah, feel free. I get a lot. Seriously, I get this question all the time, and you probably get asked as well. How's the market? Are you slow? And the reason people are saying that is because they're watching the news, they're seeing the national trends, they're oh, the rates are so high. Look, you got to be careful about that, because what you're seeing is nationally, it's not necessarily Capital Region, and we've kind of been insulated a little bit. We have such a good infrastructure. We have, good jobs, colleges, the hospitals, the universities, the tech fab, the tech plants, the chip fab, all of that type of stuff. State employment, exactly. So, Drew and I aren't sitting around twiddling our thumbs, waiting for stuff to happen. I've got a lot of buyers now that were on the fence that are now kind of seeing the light. Like, you know what, Brian, you're right. Yeah, the rates are high, but I'd rather pay a little more on the rate, refinance that, than get into a bidding war with literally 17 other people. Because remember, and I'm going to say this, and then we'll have Drew wrap up with a couple of points here. Remember, if you buy a house, the house is listed for 300, and let's just say you buy it for 308, 310, 305. Okay, at that higher rate, when the house is still going to be worth 308, 305, and you're going to refinance, and it's going to bring that payment down. Let's do the flip. The flip is you buy the house is listed for 300. There's 17 offers.
Right.
You're at a lower interest rate. It sells for 350. You're still, you're paying that lower rate, but you've perhaps overinflated the price of what the house really should be. So this interest rate hike has actually not only leveled the market a little bit, but it's made the market healthier, and you're not getting that 20% appreciation a year, because that's simply not sustainable.
Right, and that was a cause of obviously pent-up demand. We had COVID, we had shutdowns, lockdowns, whatever you want to call it. Back then, we didn't know what was going to happen. 2.5 years ago, the market, everything went dark, and we had no idea that when the world opened up again, you had all this pent-up demand, and here we are. We went 20%. This year we probably went 10%. So it's just trying to get back to a more normalized market, healthier market. And if we get normal appreciation of 3 or 4% next year, life is good. You buy a house for say $400,000, you put 10% down, you made 30% on your money in a year. And there's not too many places where you can do that. So real estate is a great place to be. Rates are coming down. The demand is good, which is good for appreciation. And we have the millennial generation going through the pipeline right now. And that millennial generation is the largest generation we've ever seen in our lifetimes or in history. And that generation does not peak out for another 3 years. So demand will continue for the next several years in the housing market. And like you said, if you're around here, real estate is location, location, location. We're in a very good market in upstate New York right now.
That's Drew Aiello, Fairway Mortgage. Drew, give us your email, your contact info for any questions.
Best way to get me is drewsteam.com, or you can even shoot me a text at 573-2435.
518-573-2435. Again, Brian Sinkoff, Associate Real Estate Broker, Muccio Real Estate Group. You know how to get a hold of me. It's Sell It with Sinkoff. You can reach out to me on my Facebook page. You can send me a text. I'm a 7-day-a-week realtor. He's a 7-day-a-week mortgage banker, whatever you want to call him. What is that, the title? Mortgage banker? Yes.
Right. Yep, we close all the loans in our own name.
Yep. And so you know how to get in touch. And I leave you with this thought, okay? I leave you with this thought. Drew and I are not telling you, buy a house now, buy a house now. That is your decision. You have to be comfortable with the decision that you make. We give you the information, allow you to digest it, take a deep breath, and then say, hey, we're ready to do this. Or we just want to ask you more questions, and that's okay. We give you the information. You make the informed decision based on guys that have been in the trenches. So we're going to try to do one of these real estate real talks, these Sell It with Sinkoff, along with Drew Aiello. We're going to do this once a month.
Once a month is good.
Yep.
Quick and simple.
Quick and simple, quick and dirty. We do appreciate you watching. Have a great day, everybody. And anything else we want to add?
Happy holidays, everybody.
Yeah.
Be safe.
Happy holidays, and take care.